Markets dipped, but this isn't fear, it's rotation. After fresh highs, smart money locked gains and waited to see who blinks. Prices cooled, sentiment flashed red, and the timeline yelled top. The data says something quieter. The crowd is tired, the flows aren't. Here's where the money moved, why it matters, and what could flip the switch next. First, the pullback. Bitcoin eased and dragged majors with it. On a 1-hour chart that looks brutal, zoomed out, it's classic. Momentum pop, short cool off, then decision time. Demand didn't vanish, it rotated. When the hot hand pauses, algos defend. See new inflow, and they sprint back. Now the flows. Spot ETFs made crypto act like a mainstream asset. Every morning begins with creations and redemptions, and those prints set the tone. Green tape on inflows, chop on neutrality, sharper fades when the spigot closes. This week, the twist was who got the love. It wasn't just Bitcoin. Ether's funds behaved like a separate trade with their own buyers, thesis, and velocity. Ether's moment isn't random. For years, it was baited to BTC. Now it's a line item. New allocators don't say crypto. They say BTC, ETH, and sometimes long tail of risk pays. That split changes rhythm. ETH can fall harder on quiet days and rip faster when demand snaps back. If the next narrative wave is staking economics, restaking yields, or L2 growth, that bid gets louder. Policy is the slow thunder. One memo won't put crypto in a retirement plan tomorrow, but it does remove the automatic no. Once committees get permission to explore, they draft pilots, add guardrails, then slip an option into the menu. It's boring. Until it isn't, and a pool of passive money needs the asset yesterday. Markets move when the rules stop fighting them. Regulators are shifting from whiplash to playbook. Instead of surprise enforcement defining the week, we're seeing task forces, comment windows, and draft frameworks that speak the builder's language. That isn't a green light, it's a bright line. Big institutions like bright lines. They size positions when they know where the fence is. On tech, the headlines were loud. Six-figure throughput bursts, latency milestones, new clients shaving milliseconds. Impressive, yes, but nuance matters. Stress tests with lightweight calls show the ceiling. Real apps live nearer the floor. The ceiling still matters. It gives builders headroom when the next viral use case hits. Wider pipes mean fewer breakages when millions show up at once. Stablecoins are the market's silent engine. Yields on reserves turned issuers into cash flow machines, and that cash supports everything downstream. On-ramps, depth, settlement. The more regulated and transparent these rails get, the more comfortable traditional money is parking value on chain. This isn't speculation. It's payments wearing a crypto jersey. There is a shadow, legacy supply. Old wallets can still spark panic with a single move. Most days it's noise traders fade. Some days it isn't. The point isn't to predict the next transfer, it's to remember markets absorb shocks better when fresh demand is visible. Watch how quickly dips refill. That's your real-time sentiment read. So where does that leave us? With 3 dials. Dial 1, daily ETF creations and redemptions. Real money, real prints. Dial 2, policy breadcrumbs, comments, guidance, pilots that let slow capital say yes. Dial 3, usage. Do throughput records turn into stickier users, real fees, and apps people touch without thinking I'm using crypto? If those dials align, today's red will look like a breath before the next push. Here's the takeaway. If you're long-term, don't ask, is the top in? Ask, is the demand infrastructure getting stronger? The signs, split BTC and ETH flows, calmer rulemaking, sturdier rails, lean yes. If you're trading the chop, respect the ranges and let flows confirm your bias. Chop is where accounts get chopped. Confirmation is where trends pay. If you're new, keep it simple. Decide rules while you're calm. Automate what can be automated. Use platforms that treat security and transparency as features, not footnotes. Momentum will seduce you. Discipline will save you. The story today isn't fear. It's maturity. Less drama, more structure. Crypto still moves fast, but the scaffolding is catching up. That's why small headlines can become big moves. When policy stops resisting, when products meet demand, and when tech keeps widening the pipes, markets don't need perfect news. They just need a nudge. Yes, price is cool. That's the inhale. The exhale is decided by flows, rules, and real usage. Watch those 3 and the noise fades. We'll be back tomorrow with the prints that matter and the one chart that shows whether today's pause was just that or the start of something bigger. Until then, keep your plans simple, your risk, and your eyes on the flows. Narratives change by the hour. Structure changes by the quarter. Follow the structure and you won't chase every headline.